FLM, wide open thinking, world-class work, and far-reaching results. Now with locations in Minneapolis, Columbus, Indianapolis, and Washington, D.C. A strategic marketing and communications company dedicated to serving clients who specialize in the business of agriculture and the life of rural communities.
Thank you for joining us for our Agri-Pulse Washington Week in Review. I'm Spencer Chase, joined as always by Agri-Pulse Senior Editor Phil Brasher, discussing the week that was, agriculturally speaking, in Washington, D.C. And my goodness, what a week it was. I mean, there was plenty going on, not just in agriculture, but really in Capitol Hill neighborhood as a whole. I mean, it's December. There's a lot of things that need to get done. So agriculture was busy this week, as was Congress as a whole. And probably the headliner event from this week, Phil, was some action on a highway bill within Congress, and a lot of important agricultural provisions included within that bill. Perhaps none more important, though, than something not particularly transportation related, but rather a deal on the crop insurance cut that was included in the budget deal. It was about a $3 billion cut. In this highway bill, there's a provision to take that crop insurance cut out. So I guess my question is, why the highway bill? Why this particular approach? And what does this mean for the crop insurance program going forward?
Right. Well, I think the basic thing is the congressional leaders, they had made a promise to the chairman of the House Agriculture Committee, Mike Conaway, back before the budget agreement was actually voted on, that they would reverse the cut at some point. They needed some money to do that. They also need money to pay for this 5-year highway bill, and the source of the money, it turns out to be, was the big banks. They reduced the dividend that goes to Federal Reserve, goes from the Federal Reserve to the banks by about $7 billion. Basically earmarked $3 billion of that to reverse or to replace the money that they were supposed to get in the budget agreement from the crop insurance companies and the crop insurance agents. And so that's taken care of. A lot of relief certainly in the among the insurance companies and the agents and throughout the industry. I think oddly enough, even the banks, different part of the banking sector was very happy with this because they rely on crop insurance, and it helped to get this reversed as well.
And I got to imagine there's a lot of people in agriculture that are very happy with what happened in that highway bill for a variety of reasons, but especially for that crop insurance provision, because it seemed like everyone in some kind of crop-related agricultural sector was just up in arms when this budget came out and the $3 billion cut was there. So a lot of people very, very happy to see that coming.
Right, and I think it was a dry run. There are going to be other attempts to cut crop insurance in coming years through appropriations bills, probably maybe through the next farm bill. There was actually a last-ditch effort by Senator from Arizona, Jeff Flake, and Senator from New Hampshire, a Democrat, Jeanne Shaheen. They raised a point of order against the provision in the highway bill to repeal that $3 billion cut. Very interesting, it was soundly rejected, 75 to 22 last night, and the last vote before final approval of the highway bill. I don't know if we could take that too far. I don't know if that indicates that there's 75 votes against any cut in crop insurance. I think that would be reading too much into it, but it was a 3 to 1 margin. The Senate said no, we're not going to sidetrack this highway bill to keep that crop insurance cut.
Yeah, and like you had said in your recap that you posted on agripulse.com, Senator Jim Inhofe, who had been managing the bill on the Senate side, said that this provision or voting for that amendment could have really derailed the whole highway bill process, and there was just huge vote margins in favor of the highway bill, so I don't think any legislator wanted to necessarily derail the highway bill.
There was no way they were going to send that into the ditch.
No. So shifting gears a little bit from the highway bill, pun very much so intended. So there have been a lot of action on Capitol Hill really since this summer. The House passed a GMO labeling preemption bill. We were waiting on Senate action there for quite some time. And Phil, you had something on agripulse.com this week that said that Senate action probably won't be coming in 2015.
No, and the industry was saying they really needed to do this now. They're staring at this labeling law in Vermont, the first state GMO labeling law to take effect. They really wanted to get something, they said, by the first of the year, and so the industry's companies would know what they would have to do in terms of labeling. Some pretty intense negotiations that were going on this fall, led by the senior Democrat on the Senate Agriculture Committee, Debbie Stabenow. But she told us there has to be a mandatory form of electronic disclosure of GMOs. Can't just be voluntary. The industry has been very resistant to that for a variety of reasons. And so Senator Stabenow said they're just not going to get done. It's this year. She says it'll be a top priority for her next year. But that really leaves us up in the air, because they really wanted to put this on this omnibus spending bill that will probably move in the next either next week or the following week. It's a must-pass bill, something Congress has to do. And it's where you would like to put and move a bill like this that's going to be controversial no matter what. It's not going to happen, it doesn't look like, so really we'll have to wait and see what happens.
And that Vermont GMO law goes into effect summer of next year, so I mean they might have some time to play with in the earlier months, but I mean I'm sure food companies are going to contend that if they're going to be selling in Vermont, they need time to adjust their packaging, things of that nature.
Right, and I asked Senator Stabenow, I said, what's going to change in January when you come back if you can't reach agreement now? And she says, well, maybe people will be more willing to sit down and have an agreement. So maybe the closer we get to the effective date of that law, the dynamics will change.
Everybody works better on deadlines, and I know that was something they were hoping to get into the omnibus bill, like you mentioned. That bill, of course, we're expecting the text to be released at some point early next week. Still haven't ironed down a specific day that it'll come out, but at some point early next week, we're expecting to be able to see that bill. What should agricultural stakeholders be watching for in the omnibus bill?
Oh, there's one big issue after another that could get resolved in here. There's a lot of interest in a policy rider provision in the bill that would block implementation of the Waters of the U.S. Rule that redefines the jurisdiction of the Clean Water Act. The White House has been resisting that, but it's been a high priority for Republicans. That could be in there. I think a couple of pieces of legislation that you're going to see there, it's possible one of them might wind up in another bill, and that's to reauthorize child nutrition programs. The Obama administration would really like to have the higher standards extended beyond their administration to give some permanence to them. They're very, Senator Stabenow and Pat Roberts, the chairman of Senate Agriculture Committee, were very close to a deal on child nutrition. Give some flexibility to schools. That would continue, but I think there's a very good chance that will wind up in the omnibus. The other issue is country of origin labeling for meat. WTO is due to rule on Monday on the size of the tariffs that Canada and Mexico can impose on the United States because of the law. So I think we'll see a resolution to that either in the omnibus, or there's another customs enforcement bill that congressional leaders would like to get moved this month as well. So.
On country of origin labeling, it seems like they kind of want to see the retaliation number first, because I mean the U.S. says retaliation should be appropriated about 90 million. Canada and Mexico say a combined 3 billion. So big disparity there, and it doesn't seem like the lawmakers just kind of want to see the numbers, see if they can, live with the amount of retaliation that's being imposed.
Yeah, and Spencer, as you've reported, that the big issue is not whether you continue some kind of voluntary country of origin labeling, but what the definition of a U.S. product is.
Right.
The industry, the processors really want to get rid of this definition, as do Canada and Mexico, that an animal has to be born, raised, and slaughtered in the United States for it to be labeled a product of the U.S. And that's where all of this hinges. A full repeal would get rid of that definition. You could see some kind of compromise on that. We'll have to wait and see.
Yeah, I mean, we'll definitely be sure to keep you posted on that one, because there's a lot of moving parts in regards to country of origin labeling, and really that release of that ruling on Monday. We're hearing it might be Monday morning, could be Monday afternoon. It's going to be at some point on Monday. The release of that number is going to set a lot of things in motion. So be sure to stay in touch with us on that one. And country of origin labeling, I mean, we mentioned there's a lot of things going on in Congress. December is a busy month outside of Congress, too. I mean, there's a lot of regulations and things of that nature that might be coming out. I mean, we had the RFS earlier this week. We've got country of origin labeling on Monday. We're supposed to have dietary guidelines by the end of the year. I mean, there's a lot of things going on. And on the RFS, just want to briefly mention that as well. That's something that the oil industry, the renewable fuel industry had been wanting to get that back on track. That was the one thing they were unanimous on, I think, of all, was that they wanted some kind of certainty in the release date for renewable fuel volume levels. And they got that through a consent decree that they signed in, I believe, April, earlier this year. But on Monday, the Environmental Protection Agency released the renewable volume obligations for the RFS, put it at about 18.11 billion gallons, potential 14.5 of that coming from corn ethanol, and that's for 2016. This release also contained information for 14 and 15, but as renewable fuels folks have told me, that's kind of a lost cause, because 14 is already done and 15 is 2 or 3 weeks away from being over. So they were really watching for those 16 levels. Oil industry was not happy with what came out, because it was higher than the proposal. Renewable fuels industry, quite frankly, was not thrilled either, because it didn't go up to the statutory levels that they were seeking. It did go up, but perhaps not enough to what they were hoping. So an educated guess would be that there's going to be lawsuits. We will let you know who files them, because I'm guessing there's going to be more than one. Yeah. But that is a program that has been sued in the past. It will be sued again, is my educated guess. But we'll be sure to keep you abreast of that and many of the other topics that are going to be going on Capitol Hill and around the country, and really around the world here these next couple of weeks. It was a busy week, and the next ones look to be even busier. Yeah. So staying tuned to Agri-Pulse.com will be a great decision if you're interested in agricultural policy these next couple of weeks. For Phil Brasher, I'm Spencer Chase. Have a good one.